Hey, welcome everyone. Welcome to the webinar that I intended to do for the longest time, but haven't done it. Why most traders fail and how to beat the market like a pro. Hosted by yours truly, Tom Alongi, Chief Dealer of Park Avenue Trading. So for those of you that know me, I want to bid you a good hello. For those of you that don't know me, I got a little bit of a bio here. I'm a seasoned currency trader with over 3 decades of experience. I was chief trader at many international banks, such as DG Bank in New York, cross-currency chief trader. I finished my career off at 𝐃𝐨𝐧'𝐭 Torino in New York, which is now UniCredit Bank. And I got over 30 years experience doing this stuff. So my idea was I wanted to launch a website or a site that basically kind of cut through the noise and all the baloney that's out there and really give some decent trading advice, the best that I could give. And I'm offering it through a live trading room at parkavenuetrading.com. You can get yourself a free ebook there and all blah, blah, blah. But what this webinar is not about, you sending you over to my website, or anything type of get rich quick or signals group. The webinar is about professional insights and a real roadmap. So the objective is to help stop you from bleeding, and become better. All right. So that's the whole thing of this webinar. Now, most retail traders lose money. It's probably higher than an 80% failure rate in the first year. I'm saying 80%. I'm giving it a little bit of leeway, but really it's not. It's probably higher. It's probably closer to like 93%. And most people give up before they even really start the journey. They see all the websites out there that's push button profits. It's easy money. You got the TikTok guys. I'm making $17,000 on this one trade. Follow me, and I'll show you how. And I don't even know what to say to that. I really don't. I mean, first of all, they're like 21 years old. And I'm not putting that against anyone. There are probably some really good 21-year-old traders, but I don't think that they'd be posting in front of Lamborghinis on TikTok. Just don't think that's going to be the case. I think they're actually trying to, sell stuff. But that's neither here nor there. I'm not here to disparage anybody, but I'm going to say to you that, most traders give up before they actually even start the journey. And it's not due to intelligence. It's due to structure. Now, what I mean, anybody that looks to, jump into this marketplace to jump into any type of trading, Forex, crypto, stocks, bonds, there are certain type of people that are interested in this stuff, and they're not dumb. They're intelligent, entrepreneurial types of people, and they understand that it's not it's not a get rich quick. They understand there's a process to this. So we're going to get into that in this video. I'm going to talk about some things that maybe some people talk about or don't talk about. So like I said, most people that do this are entrepreneurial and they have intelligence. So it's really giving them the right roadmap to actually be successful with this. So let's start off with like 7 deadly mistakes. All right, let's go to that slide right there. Why do most people fail? Well, they don't have a real edge. They don't have a real system. And that's a big portion of the people that try to do this, any type of trading. They don't really have a system. And nobody wants to talk about systems. I put up on YouTube, like, hey, would you like me to discuss systems? And like, no, they're not interested in it. But it's really important because let's say, for instance, I'm running my trading room and I'm putting out, daily trades to take with stop losses. And my take profits are discretionary. That's another issue I want to get into. A lot of people, will say like, well, you should have a 1 to 3 risk reward. Well, sometimes the marketplace doesn't want to give you 3. It just doesn't. So you have to be you have to be watching a trade and see that the market doesn't want to give that up at the moment. So maybe you only get 1-to-1, or maybe even get a half to one. But the objective is to use your intelligence and your ability to read markets. Now, that is an in-depth subject all by itself. How to read markets, and I'll be doing. I did a YouTube on market structure, and that's an important video. So learning to read markets is really important. Market structure is very, very important. So how do you get a system that if you don't want to go and buy one for 12 grand or whatever they're selling out there, or picking up a $500 robot that you don't understand? You see, the important thing about systems is that if you say, for instance, you pick up a MACD system or something, you like it, you like moving average, convergence, divergence, you like stochastics, you like that type of stuff. There's plenty of people that put their trading systems out, and you could pick one of those up and you could test it. That's another important thing you have to do. You have to test the system. So how do you test the system? Well, back testing, okay. If you're not good at back testing, all right, what you can do is I would suggest that you go and get any book by Dr. Van K. Tharp. He has a bunch of books like Super Trader, which is an older book. He's got several other books that are out there. Unfortunately, he passed away. He was actually one of my mentors, and he taught me a lot. He was a psychologist. So he studied all the greatest traders that were around at the time. He's also in Market Wizards by Jack Schwager. I think the first edition, he's in that book. And, when he first hit the scene, there was a lot of disdain. Oh, psychology. What the hell has psychology got to do with anything? It's got everything to do with everything. So I would suggest getting some of his books, reading his work. It's incredible. There's also a couple of other people out there, Trading in the Zone. I forgot the author of that. These are just great books that you need to invest in. You need to invest the time in these so you could read about what traders go through. Because once you start seeing that you're not any different than anybody else, it's kind of comforting. Because you could fix the problem then. The next thing I would suggest, before we get into chasing the market and over leveraging, which is kind of simple, the next thing I would suggest is you do a personality test, like $50. Go out online and find a personality test, because with the personality test you could see exactly who you are, and that is going to be really needed in developing your trading system. So knowing about yourself is one of the most important aspects of this whole gig. Okay, so that's important. Now, mistakes were no edge, no system, or no system that anybody sticks with. They're looking for the next shiny object all the time, chasing the marketplace. Market makes a move, the fear of missing out kicks in, and they sell, and the market reverses on them, or they buy, and the market reverses on them. And that's fine in itself. I mean, if you're a breakout trader, you're going to do that a lot, as long as you're not over leveraging. How many times, and you need to answer this question, how many times as a trader you got angry with the market and you decided to go from 1 lot to 5 lots because you wanted your money back immediately? You were over leveraging at that time. Now, if you get lucky and it moves in your favor, that's a really bad thing to happen, because you have just reinforced bad behavior. So that's both basically two: the over leveraging and the revenge trading. Over trading is the same thing. You get a win. You get 2 wins in a row. All of a sudden you're excited, and You don't care, man. You're like, I just want to keep trading. Feels great. I just want to keep doing it. That's the mistake. If it feels good, it's probably wrong. Okay, so over trading is another major issue for newbie traders, or even a seasoned pro. So I got to catch myself. I made a trade, did great on it, took my profits, and all of a sudden it starts moving more in my favor. Yet my system told me like that was the area I should take profits. Yet I'm fighting myself not to jump back in. So I do fight myself. I say, I can't do it. What I do? I walk away. I go outside. I go play with my dog. I go do something. Whenever I get that feeling, I just go lay down until it goes away. All right? Risk management. Another problem. Okay? Same thing. This basically falls into over leveraging. All of them. Chasing the market, over leveraging, revenge trading, over trading. Risk management. Okay? Larry Hite said it best. Larry Hite said, don't bet the deli to win a pickle. You can't be like insanely large for, 3 pips. You can't. All right? Don't bet the deli to win a pickle. Great line. All right? So you only really want to enter like a decent sized trade according to your overall risk profile at specific times. You don't want to constantly do that when there is no real potential to make any decent money off the trade. And then finally, like we say, no feedback loop. You don't have anybody to talk to. All right, you just got yourself and you're beating yourself up constantly, giving yourself negative self-talk. So a feedback loop would be great if you joined any type of trading room, or you joined any type of group that does it, and you can get a good handle on what's going on. Also, a great if you're not into that, start journaling. Start keeping a log of your trades. Start writing down why you did, what you were feeling at the time that you did it. What were the technical reasons that you entered the trade, or the fundamental reasons? But that's a good feedback loop, because you go back to your trading log and you could read them over the weekend and go, oh man, I felt this way when I did this in dollar yen or Bitcoin or Ethereum, and I got punched right in the nose with it. So now I know that next time, if there's nothing really backing the emotion to trade, that I'm just going to stay out and preserve my capital, because capital preservation is the most important thing we can do. All right, so let's go over like a case study. I want to show you a case study here, and it's kind of tight. It's Aussie dollar. All right. And I got the green, for upward movement. I got the red for downward movement. All right. So a retail trader would most likely be buying up by the green. Okay. Now, if they're a breakout trader, that's fine. I can understand that. All right. But they have a tight stop on things. But most retail would get out, at the bottom here, and as the market reversed, they rebuy this thing again, try to get revenge back up to where they originally got long at. But market comes down, most likely retail would sell down here. And the market rallies. Okay, they might sell down here and say, I'm not even falling for that top anymore. And next thing you know, it's up there. So I want to go over, a recent trade that I took to show you like what my behavior was. It's a successful trade. I also have one. I can go over that wasn't successful, but I'll explain to you exactly what was going on at the time and why I did what I did. First, I'll talk about the successful trade. All right, the successful trade. This just happened on Friday, and the charts actually told me before the news came out about Donald Trump announcing 50% tariffs on the EU, which actually sent the dollar yen way down, and the yen screaming against the crosses. But I had a sale level in right here. I sold 193.53s or 52s. My stop was 194.18. Why? Because I looked up Let me see something right here. Where's my brush? Is it right here? Let me get my brush going, guys. I looked up right here and I saw on the 1 hour chart this channel up here. I said, yes, the marketplace could go back up into this area. However, I'm escaping up here. If it breaks through the highs, I'm gone. I'm gonzo. 194.18. Okay, so I went short at say 193.50, and let's say 20. So it was a 70-point risk. My stop was say 194.20. I went short at 50. So it was a 70-point risk. So 1R value was 70 points. I got that because it went from 193, say 50, down to 192, like 07. And I escaped right here. 192, I got a piece back at 192.13. I got half. I took half my trade back at 192.13. And I moved my protective stop to 192.60 and got taken out. So I made the 1R on half, and I made it slightly more than the 1R on the other piece. Now, why did I do it? I just saw this. Okay? Now, I always profess that the low bar's close is more important than the low on the low bar. So that close on this bar, which I have the blue line through, was more important than the absolute low. So this is another little trick. Most traders would target the low. I didn't. I targeted the low bar's close, and I came very close to it. But I said, it's not going. I'm getting the hell out. I'm taking my profits, and I'm going home. You know, and I stopped trading that day. It was a great trade. Now, I'll show you something else. All right, you know, just so you know, oh, this guy's acting like, you know, he only makes money. I don't. I'll go over to good old Euro Yen. Okay. I had been thinking about Euro Yen going down this week, okay? But the market was not very kind to me at all. On Thursday, let's see, wait, where were we here? We were 163. Yeah. I had a sell point at 162. 162.75, I think. Yeah, 162.75. All right. I'm trying to get the right day here because it didn't do this. It did. Hang on, I got the wrong day. Hang on. Well, I know that I went short at like 162. Sorry, this is the wrong day. I had a sale at 162.61. Let's go 162.56, something like that. Market came up to it. I took it. Market came down. I was targeting this low right here. Market broke above it, closed above it. You see that? 162.62, 162.67. I bought that stuff. This is Friday. But anyway, I ended up turning around and I ended up basically squaring down in here. I didn't resell it. I went into the sterling yen. So my system gave me, I think, I mean, I hate to do this, but I think it was here. Yes, it was on this day because that was Monday, Tuesday. I thought it was, maybe it was Wednesday. Maybe it was. Must have been here, Tuesday. Basically gave me a sale right here. I took the sale. I ended up eating them over here, turning around over here. And then guess what? I ended up getting out over there. I was chopping myself up. I was happy, you know, oh, wow, I'm glad I got out because the marketplace rallied up here. But then there was that signal that was actually right and went down lower. So I had the wrong day. I'm sorry about that. But all right, so let's get over back to the PowerPoint. So the pro trader mindset is risk first thinking, like the trade I just showed you in sterling yen. I said, I'm willing to risk, you know, 60, 70 points on it, as long as I think I can get back at least 100, 150, which it happened. It was great. It was a great trade. But here's that risk reward thing again. I got half of my trade back at a substantial R value. The other half I got, got back 1 R out of it. So it's fine. But it's always risk first thinking. It's always process over outcome. You have no control over the outcome. You only have control over the process. Let me move this to over here right now so you could see the note that I have right here. You got no control over the outcome, only control over the process. Once you enter a trade, you're at the mercy of the market. That's it. That's it. You're at the mercy of the market, man. So you have to have trade detachment. You can't have any emotional attachment to any single trades. Okay? You just have to do your process, and that's having a good system. And you need to find one that suits your personality. That's why that, we talked about that personality test. That would help you immensely. Also, you need to have a way to gauge the system. So in Van Tharp's work, he has something that's called an SQN number, a system quality number. And you could put that into an Excel spreadsheet, and you could take a random, you do like a random, like say 30 trades, and you could actually see what the system quality number is with just 30 trades. Now, so in other words, you have this system and you go back in time and say, okay, my system gave me a sell here, gave me a buy here, or gave me a buy here, sell there. How did it work out? And you plug all those numbers in and it will tell you what the system quality number is. Anything that's over 2, like 2.5 is great. 3 or better is just an impeccable trading system. And, 4, forget it. You're very rarely going to find a 4. But again, go find his work and go look that up. All right, so you think in probabilities, not in certainties, okay? Ask yourself, do you want to be right or do you want to be rich? If you want to be right and you're fighting the marketplace is going to beat you. You always want to go with the line of least resistance in the market, all right? Let's go over what actually works in this stuff. Aren't I so professional? I have like my slides on the side and everything else. Market basis, framework, macro, technical alignment. I don't know why my guy wrote that, but I think he's talking about market bias is actually reading the marketplace, market structure, when markets should turn, if you have a high, a low, a lower high, a deeper low. That deeper low would be the signal, if it broke it, that the trend is changing and it's going down. You should have setup filtering, trade only high probability conditions. Risk reward optimization. Understand what your risk is to the reward. Don't bet the deli to win a pickle. Don't take the trade. If you're only, if you don't see anything there, don't do it. Live walkthrough chart recent successful trade, which I just did. All right, so I did that a little earlier. Don't want to bore you with that. All right. Part 4, structure for trading like a business. Every Sunday, I do weekly analysis, and I go over what the points are for next week that are very important. You need to do the same thing. You need to go over the charts weekly, find your resistance, find your support, find break points, and plan, okay? And trade your plan, all right? Trade journaling. Gotta do it, just write in the book what's going on in your head, what's happening, okay? Emotional reset, routines. This is really important. You need to take time for yourself. You can't always be looking at charts 12 hours a day. And don't fall for the YouTube videos. You don't need to look at charts. You need to look at charts. You need to know where market's at and where the market potentially go and where you can basically take advantage of those movements. You need to do that. But you need balance. Exercise. Join a gym or start doing some, total body workouts at home or something. Even if it's light weights, whatever. You need to get out into nature. You need to have fun. You need to go out, say, hey, Thursday, I'm I'm not doing anything, or I'm going out, I'm going to dinner, I'm going to go to the bar, have a couple of beers, I'm just going to relax, enjoy people, enjoy the public, and have fun. Because if you don't do that, your wanting to have excitement is going to come out in the market. You're going to want to generate excitement for yourself trading. Not good. Not good at all. So, back testing is important. Forward testing, got to have that stuff done. Got to know your system in and out. All right. Path forward. All right. Master one trading system. Stick to only maybe 2 trading instruments, maybe 2 currencies, maybe, a cross and a straight currency like dollar yen and sterling yen. Join a group, I would say join mine, but hey, I'm not here to be biased and say, hey, join mine. But anybody you like, focus on 1 to 2 pairs. Build a repeatable plan. Get feedback weekly from your own trading journals. Now, when I say build a repeatable plan, it's a process you do. It's like a flow chart. Market says this, do this. Market says that, do that. Okay, escape. Okay, run profits. It has to be repeatable. It has to be something that you can constantly do without any type of intuitive nature behind it. I see so many traders go, well, I'm intuitive. How do I do that? That's baloney. That's baloney. Intuition doesn't call, you can't call on intuition. It calls on you. I believe in it. Markets have sometimes, I've had a whisper in my ear, get out now. And when I've done it, was always worked. When I said, oh, that's just nonsense, it's always punched me in the face. So, but I can't come and sit down at my desk and go, okay, intuition, what are you saying to do? It doesn't work. All right. So, get weekly feedback by looking at your journals. So here's your call to action, right? I don't have anybody to ask any questions, but this is what you should do. All right. You could book a call with me. I'll be happy to talk to you about it. You could join our, trading community on Telegram. That's a paid site, so it's not free. But if you want, send me an email. I'll be willing to talk to you. No problem. I'll even give you my phone number. We can call. Could talk. I'll try to help you work you through your issues. I'm not going to be trying to sell you to come into my room. I really don't care. But I would be willing to help. That's for sure. So ask yourself, what's your number one obstacle right now in trading? And, write it down. Try to figure it out. If you can't, give me an email. I'll be definitely willing to help you out. So I want to thank you, and thank you message and reminder of professional path. I don't know what that means, but I want to thank you for viewing the video. Please leave some comments for me. Make sure you watch my daily analysis. I give out some points there to help you along in trading. I've been really hot lately. Can't say it's going to continue forever, but it's been good. It's been good. And right now, my SQN number is at 3.1. So it's rocking. And get that information about the SQN. And remember, always, always, always enjoy the party, but dance near the door. Cheers.